how much are the markets dependent on what happens with direct government payments and more relief on the fiscal side of things for America?
Yeah, Dom, I do think that the markets have already priced in to some extent that we're going to get another package. I'm not sure they priced in everything that we saw in this $1.9 trillion plan. Probably the $15 minimum wage, the state and local aid. You were just talking with Eamon about things that maybe wouldn't make it into a final version. Those are two things that I think will probably be negotiated pretty strongly by the Republicans. But the market anticipates there will be some form of direct payment, some form of assistance to small businesses, and that's priced into the market. That's why we had seen up until the last couple of days the market continue to trend higher. I think it's already looking past this, though. It assumes it's there, it's baked into the cake. The market is already looking 6-9 months down the road when the reopening trade is more prominent. Things are starting to open and get back to normal with the vaccine rollout. That's what the market is focusing on right now, along with the guidance coming out of earnings, which obviously we know starts today with the banks.
All right, so what's most important then? I know that the COVID relief and the trillions of dollars coming out of D.C. is important, but should we focus for investors on things like earnings? Do they matter given the COVID narrative these days?
You know, it's interesting. I was actually talking with a group of clients yesterday, and we talked about how the economic fundamentals in 2020 tended to hold their own, really led by the consumer, led by the housing market. And one of the key factors for us in 2021 is, can those fundamentals continue to hold? The positive headlines from the vaccine rollout are only going to take us so far. We've got to have those fundamentals there. We think manufacturing is going to continue to do well because we heard from the small businesses inventories are really low. So manufacturing should do well. If the vaccine rollout continues along its current path, then you're going to have services start to catch up. The consumer is going to have more money in their pockets from the stimulus plan. That's going to allow consumption to continue. So those are key factors in 2021. I think we're getting to the point where we've kind of looked past some things through COVID long enough at this point, and now we need the fundamentals to catch up. I think they're going to do that. If they don't, that's where you might see a 5, 6, 7% pullback in the market, which for us would actually be an opportunity to go and buy some of the names perhaps you missed out on.
All right, so let's talk about some of the names that you are drawn towards right now, Victoria. I mean, 2020 was the year, you could argue, of big tech, the work from home trade, maybe even IPOs and SPACs. What's 2021 going to be the year of?
You know, typically you wouldn't think in January it'd be the big IPO time, but look, I mean, you were talking about Petco and Poshmark. They did really well in their opening day trades. But for us, we continue to keep that barbell strategy where we have some value and cyclical names in there. We do own JP Morgan. We own Charles Schwab. So we have some cyclical names, but we still really like that growth trade. We're overweight on the growth side. We think that some of the things that you talked about, the work from home, the change in people's daily lives where they're doing more things online, whether it's retail shopping, whether it's healthcare, whether it's fitness. Look at some of the companies that you will need for all of that to continue, whether it's in the 5G space, like a Verizon, whether it's going to be in American Tower, where they're building out those cell networks, whether it's a Broadcom, whether it's cloud business with Amazon and Microsoft. Yes, those names have had strong runs in 2020, but we think the trends, the longer term trends that are set forward there are going to continue, and we'll continue to see growth in those names. But don't forget things like housing we talked about. Builders have a long backlog right now, and we saw your big number, 63% of people bought houses without even looking at them. So there's some plays there as well with maybe Lennar and Home Depot.
Shepard Smith here. Thanks for watching CNBC on YouTube.